So what do I mean by market? So the market is a group of buyers and sellers that are interested in these products that may not necessarily want to buy them new, but are interested in buying secondhand or from the secondary market. So what affects the secondary market is the availability of other products in the market and how your product is perceived in comparison to other similar products. For example, if you have an old iPhone, the value of the iPhone will be compared to the value of the latest iPhone that's in mint condition, that hasn't been used, that's easily available in store, that you can just buy. How does it compare to a new product? Now, if it's a one-of-a-kind iPhone that was only made once, that was owned by Steve Jobs, signed by Steve Jobs, that's really rare and highly scarce, since there is not many of that product on the market, it would be valued at a higher price. But now if it's just a regular old iPhone that was once used and nothing really special about it, and you could find hundreds or thousands of them online, that's not going to be as valuable to someone. In the secondary market, supply and demand factors are taken into consideration. It's sort of like being at an auction. If you auction your product out to the market, what is the market willing to pay? If it's a really scarce or rare product and there's a high demand for that product from the market will be willing to pay a higher price. Now, if you went to auction with a very common product and it wasn't scarce at all, there was a lot of supply of it in the market, well, then you probably won't get as much for it compared to, say, a newer product.